Andrea Orcel, thank you so much for joining CNBC today on your Q3 numbers. So you upped your guidance once again after upping it back in July already. Net revenue circa 24 billion from above 23, net profit above 9 billion. So what led you to up your guidance this quarter again?
Well, I think we have almost completed a period of transformation that brought this bank to a completely new run rate. We are 5 times the net profit we had in 2021, 3 times the return on tangible equity, 2 times the organic capital generation and distributions. And we now feel quite solid at that level. And therefore, we now look forward to a period of sustainable quality growth. And we think we can sustain the 9 billion of net profit and grow from them in the future. So for us, it's kind of passing a strong message of confidence on our numbers and confidence on what UniCredit can do in the next 3 years.
So looking at your revenue up 2.6% for this quarter. So of course there was an eye on what the NII would look like. Of course we see this going down with lower interest rates. Fees up 8.5% there. So how do you see the mix of this going forward and how fees can help you offset lower NII?
Well, on NII, one thing to note is that the sequential NII is flat. We have been very good with tilting the client and product mix in order to defend the NII together with the usual pass-through discipline and everything else. But what we expected on fees is ahead of what we were expecting. And therefore, as we move into 2025, we are confident about the resilience of our NII. It will go down, but we're confident about the resilience. We're confident about the fee trajectory. And therefore, we think we can absorb the impact from rates, the impact from cost of risk normalization, for us, the impact from compressing Russia, and still deliver a bottom line that is in line or better than the one of 24.
So because you mentioned 25, you also mentioned the full year 25-26 annual ambition of above 9 billion net profit and distribution greater than full year 24. So here again, let's talk about next year and what things look like. You think you can continue with the momentum that we've seen over the past few quarters, with 15 consecutive quarters of growth? You can project that going forward?
Well, we're very confident for a few things. I think the most important point for us is that as the environment normalizes, which for us is lower rate, higher cost of risk, and we compress Russia, we think that UniCredit will be able to demonstrate differential value vis-à-vis our peer group. We have, in addition to what we've done on transformation, and we have 3 things going for us. We start from an industry-leading set of results and across all the metrics. From there, we have structural strengths. People have missed our exposure geographically, client and product, which is a great mix of profitability and growth, which we will leverage further, and it will become apparent. The second thing, we have some what we call internally idiosyncratic accelerators. For us, they are the tail of the transformation initiatives that we have ongoing. They are the lines of defense that are going to be released if they are not needed, and they are the strategic flexibility, so investment we can do to accelerate what we have today. Commerzbank is an example, Vodeno is another example. So these things will pitch in and allow us to go further. And then I think that we have demonstrated to have a team, a set of people that is passionate about UniCredit and creates alpha across the board. So we look forward to this normalization of what some people call headwinds, because I think it will allow us to demonstrate the differentiated value that we can bring.
You mentioned Russia a couple of times, the net profit there up 68%. So, of course, you filed an objection to the ECJ against the ECB order to wind down almost immediately Russian business. So can you tell us where you stand at the moment when it comes to the Russian?
Well, if you look at our results, today we are going to take people through the fact that we had set targets for, in Q2 we had set target for 25. We basically achieved them already in 1 quarter. So at the moment, we said we would be below 2 billion in deposits. We are. We said we would be below 1 billion in loans. We are 1.6 billion, but we have another few quarters to go. We said that we would eliminate the cross-border exposure. We're down more than 95%. And we said we will compress payments away from US dollar and euro. And we have done exactly that. So our strategy since Q2 of 2022 hasn't changed, and it is an orderly wind down. And that is what we're doing. If anything, we're accelerating on that. So by the end of 25, we will communicate new targets, and we will be exactly where people would expect us to be.
And you mentioned the normalization of the environment can show what you can do. And of course, we know that the big news this quarter is the investment that you made into Commerzbank. Now we've heard surprise move, aggressive, unfriendly attack. That's just some of the ways that some German leaders have qualified about your approach. So are you surprised about how surprised they are by this approach?
Well, let's put it this way. We wouldn't be here if we hadn't been invited to buy that stake. And it all started in a way that we thought was constructive. From there is the past. Let's look forward. We are a key investor in Commerzbank. We have more than 21% in the bank. We are actually encouraged by the fact that now Commerzbank is calling for an investor day and is trying to improve its performance. We see Commerzbank and Vereinsbank as two mirror images. We have the same market share in corporate Germany. We have the same similar market share in Mittelstand of Germany. We are really a carbon copy of each other. And therefore, it's very easy for us to say, well, look at the results of Vereinsbank, look at the result of Commerzbank in Germany. They need to be very similar. They are not. So as an investor, or something more in the future, we're very keen to see that the management team will move into that direction.
Some voices in Germany say that the trust had been broken, that you bought a stake directly from the government, but that you built another stake separately, and that wasn't clear to them at that moment. Was there a break of trust at that moment?
Well, I think that there are, I can only talk for UniCredit. UniCredit made an investment that was strategic, that is strategic. At the time, we had an opportunity to up it up to 21%, and we did. It is very consistent with our being keen to deploy our capital and extract value from it, either, as I said, through an investment that returns a lot more, as the management team of Commerzbank improves the ante and goes better and better, or in a combination with us. And the future will see where that takes us.
So a lot of people saying this is a watershed moment, that European cross-border merger potentially. In a way, this is not a new cross-border because you are already in Germany, you're already present there. So is it for you a watershed moment in terms of cross-border merger in Europe, a moment to test whether Europe is serious about the capital markets union and about the banking union?
So I would think that it's a combination of the two. Yes, as you said, we are in Germany, and we have been in Germany for a long time, and we have a third private bank in Germany just behind Commerzbank. So from that perspective, it's an in-market merger, nothing more, nothing less. However, Commerzbank, for example, would bring Poland, and that is a cross-border. So it's a mix of the two. I think that when people talk about cross-border consolidation and banking union, and this is a test for both, it's more a question of the reactions to a move that has been done, and whether those reactions clearly communicate that banking union is off the cards, because anytime a foreign organization takes control of a meaningful bank in another country, there are tensions. But I am quite optimistic about Europe. I am also quite optimistic about Germany. I think that beyond what is happening today, people will look at the facts, and the facts are actually quite positive for Germany and for the European Union. I would also say that they are quite positive for Commerzbank.
Some of the concerns as well is that, of course, you're looking for synergies, and potential tie-up between HVB and Commerzbank would mean some job cuts, and also questions of what product you'll be able to offer to some middle-sized companies in Germany. So what do you respond to unions that have this sort of concerns?
Well, I would say let's start from the two banks separately. Vereinsbank has a 20 percentage points advantage in cost-income ratio to Commerzbank. We haven't merged with anybody to get there. So I would say that a well-run bank, that is the carbon copy of Vereinsbank, should be in that zip code. It's not. So that has nothing to do with synergies. It has to do with running a bank that at some point needs to be viable for the long term. And the second thing I would say, if you look at the relationship that UniCredit has with employees in Italy, in Germany, in Austria, across our 13 banks, I don't think you have ever noticed big action against us. Actually, every time we do a new contract or whatever, it's always very cohesive, in a cohesive fashion with Workers' Council representation. So whatever we've done convincing the people of UniCredit that that is a necessary move because the industry is moving in a certain direction. And I don't think here it would be anything different. With respect to the Mittelstand, I think we have very similar market share. I think Commerzbank has about 60 to 62 billion of loans to the Mittelstand. We have 55 at HVB, so again, not that dissimilar. I think that the advantage we would bring is that because of group scale, we have factories in trade finance where we get voted #1 in Europe every year in, year out. We have factories in hedging of commodities, rates and other risks. We have advisory and capital markets. We have a number of factories that would allow the offer that Commerzbank has today, which is primarily focused on lending, to move to a much more rich offer, and for the Mittelstand companies of Germany or of Commerzbank to be better connected to another 13 or 14 countries in Europe. I think that's a positive. And frankly, the competition in Germany is very high anyway. You have 60% of the sector in the hands of the public sector. They are the really dominant force. And the three private banks are trying to compete. So bringing two of the three together in a way that is that improves their ability to compete because it would bring the market share to 10, 12%, I think it's a good thing for the sector, not a bad thing for the sector.
Another concern as well is the potential exposure, if there is a tie-up to Italian government bonds, about 40 billion euros that UniCredit holds. Is there a sort of prejudice there, a trauma from the sovereign debt crisis, the fact that UniCredit is Italian? Is there an element of this, you think, playing out, despite the current dynamics that we see in the Italian economy doing quite well against the German economy not so well? Is there an element of prejudice into this?
Look, I would say, we hold about 40 billion of Italian government bonds. They are short duration, so below 4 years, and we have almost no interest rate risk on them. This is 5% of our balance sheet, 5. And I would also compare that to any other European bank holding bonds of their sovereign. What I would say is UniCredit went through a real difficult time through a crisis, and you can all judge of that. At no time did we squeeze Germany. At no time did we repatriate capital or liquidity from Germany. At no time did we ask for government support, something that Commerzbank had to do. So I would probably say that our ratings are now, group ratings are converging to the one of Commerzbank. The HVB single standing rating are at the level of Commerzbank. We found ourselves at the same level. And 2 rating agencies have indicated that if there was a merger, they would upgrade our rating. So we can throw these things out there, but I don't think that that is constructive, and I don't even think that that is quite relevant, because we need to look at the entire quality of the organization, its capitalization. Our CET1 is a lot higher than the one Commerzbank has. We need to look at the liquidity. We need to look at everything else like rating agencies. And at the end of the day, I don't think that there is a concern there. If there was, you would know about it before we would ever have moved.
Carlo Messina from São Paulo was on CNBC yesterday talking about those potential tie-ups, whether it was BBVA and Sabadell or UniCredit and Commerzbank, and he talked about how the opposition to those deals came from populist pressures. And of course, in Germany, we're also entering an electoral cycle in 2025. So do you believe that there are some populist pressures in opposing this kind of tie-ups?
Well, I would say that there are always, let's say, more than populist, I would just say public opinion views on what may happen. I think I would bring people back to the facts. The banking industry continues to shrink, and it's replaced by alternative intermediaries. And number one, this should not be the case because it is best for any countries to have strong banks, regulated banks, than having other entrants who are less regulated. But the second thing is, if banks do not get to a level of efficiency and profitability to be able to be viable, investable, then little by little, the consequences are going to be much worse. One of the things that people do not realize is, if you take us, if you take Commerzbank, if you take any bank, and you look at the last 10 years, mergers or no mergers, headcounts reduction have occurred. And they have occurred because banks have remained behind the ambulance and trying to chase it all the time. I think banks need to be efficient to prevent new entrants. They need to be profitable to attract capital. And if those two things occur, and we can bring along our people, explaining to them that we are creating a better opportunity and career development for them, then we get to a good place where we can be supported. But, you know, any time in any industry where you look at a merger, there will always be trade unions that will tell you, well, there are going to be job losses. And that is correct. But the question that one should ask is, if you do not do rationalization today, 5 or 10 years from now, what is going to happen to that company that cannot compete anymore? And isn't that outcome worse than trying to do what's right today? And I think that's the point.
To finish this conversation, also, what do you tell your own investors? Because bigger bank means higher capital requirements and maybe lower returns. So are you seeing some concern today from your own investors about this time?
I don't see concerns because I think that our investors know full well how disciplined we are. We will only do this transaction if it doesn't dilute the returns that our investors have the right to expect. Actually, they need to improve those returns meaningfully. Otherwise, even for us, it doesn't make sense. And as I said before, the real focus for us is bringing UniCredit to the next era of sustainable quality growth. And we can do that. And I think our investors think that we can do that. So if Commerzbank or any other acquisition accelerates that, adding value, for both, by the way, I think that's a great thing. If it's not like that, we will move on, but then everybody will need to take their own responsibility and accountability for what's next. We're very, very confident that for us, what's next is a positive thing.
Very final question on the macro front. We're all watching our phones, waiting for news on the US election potentially. If we see Donald Trump come back to the White House, his first day at the White House was quite disruptive to European economies, talking about tariffs, the impact on inflation, but also geopolitical aspects. What would a second mandate of Trump in the White House mean for Europe and for the world?
Well, firstly, I never comment about politics. And secondly, I think it is very difficult for anyone to really know what will happen post these elections. I do think I would bring it back to we had a decade or probably 15 years of relatively mellow environments. And now we're going to see more volatility, more dislocation, unfortunately more conflicts, and more fracturing between economies and countries. That is not great. That's not what my generation thought they had achieved. But hopefully at some point we all understand and we can come back together to a greater extent.